HCL Tech reports a steady quarter with earnings in line with estimates. No negative is what the street likes, and as a result of which the stock gains. The management delivers better than expected revenue growth guidance and says the deal pipeline is a near all-time high.
Cyient hits a fresh 52-week high after reporting a very good set of numbers. The management sounds bullish on the transport vertical. They also say that they'll hit the $1 billion mark by the end of this fiscal.
ICICI Prudential Life sees some profit booking after posting a good set of earnings in the fourth quarter. The company achieves the target of doubling the value of new business in 4 years. The management tells CNBC-TV18 there is further potential of doubling the VNB in the next 3 to 4 years.
Sterling and Wilson Renewable Energy falls after losses widened in the fourth quarter. The revenue comes in lower by 90% at around 85 crores. The unexecuted EPC order book stands at around 4,900 crores at the end of last fiscal. Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangalam Malu. Well, Mangalam, Friday morning, but we've got a long day. You have to track Reliance Industries results as well. And then we're off to the weekend. So it's been a hard-working week, right? 5 days on the trot. We're not used to it.
Well, it's been a hard-working week, but, Nigel, there's just one line to describe the market right now. The range is getting narrow as the weekend's getting closer.
Yeah.
The only difference is that the mid-cap index is underperforming today. We have around 1,700 stocks declining. But that's for another day. We'll wait by for Reliance's numbers. Until all of that, we'll leave the hard work with Ruchit Jain. Ruchit, I mean, the range, it's so narrow. One doesn't know what to do. What do you suggest one should do?
Yes, hi. Very good morning to both of you. Well, yes, the range has become narrow since last 3 or 4 trading sessions, but one should also take into consideration what has happened a week prior to that. We had about 9 straight trading sessions of up move from that 17,100, 17,200 breakout, where we had seen a very sharp up move. So usually when the momentum readings get overbought, we see some counter trend moves. And the good thing about this move is that we are not witnessing any significant price-wise correction. So this is just a time-wise correction which we have witnessed in this week. I think probably today even the mid-caps would show some correction because even the mid-cap and the small-cap index are a bit overbought. But once this small correction gets over, a market should probably resume its uptrend. If you look at this FIS data, they started this series with quite heavy short positions where only about 10% of their positions were on the long side. And they have covered their short positions gradually, added some long positions. The long-short ratio has improved from the 10% to around 36-37% now. So we are not witnessing any fresh short formations in this narrow range consolidation, but I think it's just a time-wise correction which is going on, which once completed, we should see a resumption of uptrend, maybe later part of next week. If you look at the 20 EMA, that has moved higher to 17,520. So till the market is trading above 17,520, take this as just as a time-wise correction. Probably we should see a resumption of the uptrend quite soon.
Okay, all right. Resumption of the uptrend. That's the hope, right? Because it's been dull and boring, actually, Rajit, right? But what about individual stocks? There are plenty of opportunities out there.
Yes, certainly quite a good stock-specific momentum is already there in the market. So I have a couple of recommendations, and both on the buy side. First would be a buy call in Alkem Lab. The pharma space has been doing quite good in this April series. Alkem Lab has formed a bullish flag pattern on the daily chart, which is a continuation pattern in technical analysis. So we expect further up move in the stock. One can go long, one can create fresh long positions over here with stock below 3350, expecting target somewhere around 3600 to 3620. And Pidilite would be my second recommendation, where in Wednesday's trading session we witnessed a breakout above its 89 EMA. After a long period of time, the stock has shown price up move supported by good volume. So I think a momentum or at least a pullback move should be seen in the near term. So one can buy Pidilite as well with stop loss below 2360 for targets around 2540.
All right, Ajay, thank you so much for joining in and giving us your calls on the index as well as individual stocks. The good part is that despite the rally and the consolidation, we haven't fallen too much. And that's a positive that Ruchit takes away from this. Let's shift focus to our special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Jitendra Gupta joins in.
Hi, thanks. We believe Ircon International, which moved up recently from 52 levels to currently at around 62, is undervalued. It is trading at 9 times its fiscal 24 estimated earnings and offering a dividend yield of close to 3%, which is quite good in the light of a strong order book of close to 38,000 crore, which is almost 5 times its annual revenue. Moreover, the project pipeline is quite strong. In the last budget, we have seen a significant spurt in the government's capital expenditure towards railways to the tune of almost 2.4 lakh crore in fiscal 23 till December. The government expenditure has increased by almost 77% on a year-on-year basis. So overall allocation and awarding of the project is quite strong. Now, if you look at this from the perspective of improving execution and margins, it obviously means greater earnings visibility. In the first 9 months of the fiscal 23, it has achieved close to 49% increase in revenue on a year-on-year basis. The March quarter is typically better. It is anticipated, but it is anticipating booking around 9,000 to 9,500 crore of revenues in March quarter. Overall, supported by strong order book, revenue and visibility remains good. And with the higher scale and lower cost, profitability too should be better, and that should drive stock higher.
All right, Jitendra, thanks a lot for that. We'll keep an eye out on that one. For the time being, we'll slip into a short break. You come back, we'll continue our focus on a whole host of stocks. A couple of them will be on our radar. Stay with us.
Well, 17,600 on the index right now for the Nifty, down about 25 points. Not too much in terms of a move so far, but a bunch of stocks are buzzing around. We'll talk about that in just a bit. Key, gainers in the F&O space belong to the telecom space. It's Vodafone Idea, which is up 8%. And on the back of that is Indus Towers, which is up 4.5% as well. Vodafone Idea, of course, higher as Kumar Mangalam Birla is back on the board of the company. So that provides some sort of stability and some sort of sense of security to the lenders. And as they get some security, we have its Indus Towers, one of its biggest clients, so to say, or Indus Towers' biggest client is Vodafone Idea, benefiting from that as well. But let's talk about some other stocks then. Sterling and Wilson down 6% after reporting a weak set of fourth quarter earnings. Vivek joins in with more details. Vivek.
Well, that's right. So Sterling and Wilson Solar are under quite a bit of pressure today. This is on the back of the fact that the company's Q4 has been quite subdued. Now, first having a look at the headline numbers, revenue is down almost 91% on a year-on-year basis. EBITDA loss of close to 352 crore. And on the bottom line, the company has declared a loss of over 415 crore rupees. Now, however, when you're talking about the internals, the unexecuted EPC order book looks quite strong at over 4,913 crore. In fact, the management has attributed the revenue decline to lower contribution from some of the ongoing EPC projects. In fact, what they're saying is that the gross margins have remained subdued or suppressed primarily on account of the international EPC projects and also on account of the movement as far as the raw material prices are concerned. However, when it comes to the project pipeline, remember, markets are keenly anticipating the company to go ahead and sign one of the largest order wins ever as far as its Nigerian operations are concerned. So now what the company says is that while the MOU has been signed, they are now awaiting the final project financing to come through, and that again will reflect as far as the order book is concerned. The company has guided for either Q1 or Q2 of FY24 is when this particular order win could actually come in. Lastly, when it comes to the outlook, what the management is saying is that they're targeting to significantly reduce net debt, in this fiscal itself, and also aim to return to profitability and deleverage the balance sheet in FY24 itself.
Okay, all right, Vivek, thanks a lot for that. Well, let's move on to Liberty Shoes. That's the one who's surging in trade today and has seen a 30% up move in this week alone. Mangalam tells us what's going on to this stock.
Nigel, I was wondering what's going on to this stock as well. Because for a stock to run, 30% in a week, 47% in a month. And if you just take a look at it, the last 12 months itself, it's up 74%. Something has to change, right? Yeah. So I was looking at some details. And, despite this 74% rally that we've seen in the stock in the last 12 months or so, the stock is still about 35% off its 52-week high. So the graphics should, come up for you on the screen. I've seen the stock see similar such moves, at least on 4 such occasions in the last 15 years. I was looking at data between June to October 2005, the stock has rallied 4 times. Between Feb to September 2014, the stock has rallied almost 3 times. Between August to September 2017, the stock has rallied about 150%. And between June to October 2022, last year itself, the stock had rallied about 340 odd %. What exactly caused that rally? No one knows, because once after this spurt, we see the stock, gradually move lower, as we have seen from its 52-week high as well. But in September, the company announced that, they have hired Ayushmann Khurrana and Rakulpreet Singh as brand ambassadors. They're repositioning the company, and importantly, they will be net debt in the next couple of months. Did that happen? Well, we'll have to watch out for the March balance sheet to know that, because if the first 9 months are something to go by, in the third quarter itself, we haven't seen any change in their finance costs. It's still around 3.3 crore per quarter. And the first 9 months as well, the finance costs have been around 9 crore itself. So whether they've gotten net debt free or not is something that we'll have to watch out for. And if you compare it with all the other listed peers as well, on all parameters on the trailing 12-month basis, be it the revenues, where the company is the smallest when it comes to all its other peers. If you look at the margins, they do barely double-digit margins, whereas others, Metro, for instance, does about 33% and Bata does 23%. And this, remember, at a time when the margins of all footwear companies have compressed a tad bit. Even profits, last year they did profits of 14 crores. Guess how much Metro did? 366 crores. Bata did 320 crores. Relaxo, which was an underperformer, that too did about 200 crores in profits. What is the fundamental driver of a stock? It's the return on equity and return on capital employed. Over the last 5 years, the average has been 5 to 8%. Another thing that is questionable is the fact that the promoter stake also has gone down by about 1.5% in the last couple of quarters. The only thing that works for them right now is the fact that it's trading at a steep discount to all the other companies. Relaxo is trading at 76 times, Metro at around 50 times. Liberty, if you look at the current quarterly run rate, if you analyze that, it would be around 25 times. It's for reason that it trades at a steep discount, and the moves on the stock have happened 4 times in the last 15 years. Inexplicable. So just be mindful of chasing this.
All right, we'll be mindful on that one. Mangalam has been tracking for the last few years. He said he's seen this before as well. The stock suddenly takes off, and then it seems the shoelaces get tied into a bit of a knot. So let's see how that one plays out for this time. Let's slip into a short break. When you come back, we'll get you excerpts of our chat with the management of CEAT. Stay with us. Well, though it's looking like a bit of a dull market, there are a few winners actually out there. Bharat Dynamics, we were speaking to Sridhar Shivaram of Inam earlier today, and he was indicating that defense stocks can continue to do well from here. For the timing, at least, we're seeing that Bharat Dynamics has moved to the high point of the day. Piramal Pharma, well, the stock has been all over the place. It was down close to 3%. Now it's cutting some of those losses, so keep an eye out on that one. And Chambal Fertilizers as well has moved to the high point of the day. But let's get you that promised exclusive then. My colleague Parikshit, he had a chat with the newly appointed MD and CEO, Mr. Arnab Banerjee of CEAT. He says that the internal succession plan has been in the works for a while. He also adds as a use of opportunity in the Europe and Latin America market. Let's hear him out.
So Anant decided to step up into a larger role in the RPG group. He is now looking after Zensar, CEAT, as well as group strategy and new businesses for these two companies as well as for the entire group. So when this transition was decided upon, the CEAT board deliberated upon a succession planning. I had been there in the CEAT board along with Anant for over 10 years now, and I had been in CEAT for a long time, handling various roles. So internal succession planning would allow for continuity of strategy, processes, and thinking. And it's definitely a plus that the board thought about, and that's how it all came about.
Right. So you're saying that this had been in the works for some time now?
Yes, as I said, I've been part of the board for a long time, handling various roles and responsibilities along with Anand. And most of the stuff in terms of strategy, purpose, vision of the company, we're a TQM-based organization. All that has been jointly designed by Anant, me, and the entire management team. So yes, this is not an all of a sudden decision.
Right. But as far as the export pressures are concerned, do you think that pressure that you're seeing in international markets, a lowering of demand, those pressures continue even now?
Talking of global markets, various segments, we have a significant presence in agri markets, agri radials, passenger car tires, and TBR. Overall, there is a slowdown in Europe, but that's an opportunity also for us to grow because we are positioned as a value brand in Europe. We are seeing US going fine, and for our agri-radials. For passenger and TBR, as I mentioned, we are going to accelerate our GTM, which is going to happen in the next financial year. LATAM is doing fine. So barring Europe, where there's a spot of bother, I think our outlook is positive overall for our brand in the global market.
Right. I would also like to ask you about your outlook on capex for the coming for this fiscal. Would there be investments in more capacity expansion or increasing the company's footprint in India?
Yeah, as I said, we are coming to towards the end of our capex cycle. We have had a huge capex over the last 2-3 years, and this is the tail end. Only capacity expansion that is going on is at Ambernath in Maharashtra, which is the agri-radial capacity, where we are expanding to about 150 tons per day. Apart from that, it is an opportunity for us to use up our expanded capacity and go for growth. So no fresh capacity apart from Ambernath that is coming up in this financial year.
All right. So you're saying that now the focus will be on growth, no further capacity expansion. How do you see the demand outlook as far as the various automobile segments in the domestic market go? Do you see a softening of demand in any of the segments?
Well, April, May, June is the peak season of for tire sales. I think we are seeing decent demand and uptick in demand in the commercial space, both in aftermarket as well as in OEMs. It's recovered the ground that was lost during the COVID period. In four-wheeler space, passenger tire space also, we are seeing stability of demand. It's not growing at a very rapid pace, but it is positive, and we are optimistic about that as well. There is some softening of demand in the rural market, in the small towns for two-wheeler, and with the prediction of a good monsoon, we are hopeful that post-monsoon period, the rural demand uptick is also going to come about in the two-wheeler space, and also for the farm tire space.
Okay, my final question would be on the electric vehicle segment. What is your view on increasing production of tires for EVs, and what kind of order book do you foresee for FY24 for your electric vehicle customers?
Yes, so this is a very initial trend that we are seeing of electrification across categories in the country, but I'm sure this is going to pick up pace, and all the infrastructure things that we are talking about also will catch up pace. We have been preparing for this for quite some time now, and we have an offering in two-wheeler. In two-wheeler, in the OEM space, we already have more than 50% share in electric vehicle tires, which is mostly scooters. Replacement demand is yet to come up. In the four-wheeler space, we are operating intensively with several OEMs for development of electric vehicle tires. We have been one of the first brands to be approved by the commercial vehicle OEM players. So we have an office also at Frankfurt, as you know, which is very much active in developing, giving us inputs for developing these tires. So we are all set and ready in terms of technology, in terms of capability, and in terms of manufacturing capability, capacities, as well as in terms of development of the brand in this space. And we are pretty excited about participating in the electric vehicle space.
And very briefly, could you give us your growth outlook for FY24?
FY24 first quarter, of course,
FY23 first.
Overall, it's very difficult to predict because of so many uncertainties, geopolitically speaking. We are optimistic about our growth outlook overall. I think there's going to be a better year in terms of top line over the past year.
All right, that's the management of CEAT, who is discussing and talking about the way forward for the company. Nothing much has changed for the market, barring ITC, which has moved to the high point of trade just in a matter of last few minutes. So ITC is the stock which one should keep on your radar. With that, we wrap up on this edition of Chartbusters, both Nigel and me. Thank you for watching. Trading Hour comes up next.